Applied Digital appears well positioned for dramatic growth in 2023 and 2024 through expansion in cryptocurrency mining and new cloud computing services. What I'll do in this video is I'll go through the financials of this company. I'll go through some Wall Street analyst ratings. At the end of the video, I will give a price prediction based on technical analysis. So Applied Digital has rapidly expanded its crypto mining capacity to meet customer demand. The company currently has about 285 megawatts online, up from 187 megawatts at the end of May 2022. The entire capacity is fully contracted out to customers under long-term deals. To further support growth, Applied Digital plans to begin an additional 200 megawatts online in the near future. So they're bringing on another 200 megawatts online. That's going to happen in the near future. The capacity added is fully contracted out to customers already. Applied Digital's revenue jumped from 7.5 million in fiscal year Q4 2022 to 22 million in Q4 2023, driven by expanded crypto mining capacity in North Dakota with facilities in Jamestown and Ellendale ramping up utilization, and the company is poised to grow as 200 additional megawatts come online. And kind of switching gears here, Applied Digital is expanding its AI cloud services business and developing next generation HPC data centers to drive future growth. The company initially launched a AI cloud platform supported by its 9 megawatt HPC facility in Jamestown. Applied Digital announced an agreement with its AI cloud customers worth up to about 180 million over 24 months, with an additional 180 million option for a potential of $360 million. The company secured a second AI cloud agreement worth up to 460 million over 36 months. To meet AI cloud demand, Applied Digital acquired over 26,000 GPUs to be installed by April 2024. In cloud computing, competitors like AWS, Microsoft Azure, and Google Cloud are dominant players, yes. However, though, Applied Digital is differentiating itself by focusing on AI and machine learning and high-performance computing workloads. Its first mover advantage in offering tailored HPC infrastructure and AI workloads presents an opportunity to establish itself as a leader in this niche segment. Recently, the company announced that it has achieved elite partner status in the NVIDIA Partner Network, reflecting the synergies between Applied Digital's HPC applications and NVIDIA's GPU and networking. So everything kind of seems to be rolling in Applied Digital's favor at this point in time. So, they always say in a gold rush, you should be buying the companies that are selling the pickaxes. And in a way, Applied Digital is selling the pickaxes in the AI space through its cloud computing. And then with that being said, let's take a look at the shareholder list for this company. So we can see here that there are only there are only 3 major buyers of this stock at this point in time. So there are only 3 Wall Street firms, 3 investment managers that own Applied Digital. What does this tell me? This tells me that this stock is grossly under-owned throughout Wall Street, and you're going to see some of the largest players such as BlackRock, State Street, Vanguard have to buy this stock because they are passive indexers, and those companies typically buy pretty much every single company in the market. So given the fact that this company has been on the market for quite some time and it's obviously publicly listed on the NASDAQ, I believe we could see a lot of the large asset managers kind of passively buy into the stock over this coming quarter, which I think would obviously push shares higher. And then in terms of short interest, we can see that there's still 23% of the float sold short, and we have 4.8 days to cover, which means that it takes 4.8 days of average volume to cover the shares that are sold short. So pretty big numbers there for the short interest, definitely implying that we could see somewhat of a short squeeze for the stock. Although it's worth noting that with a days to cover of only 4.8, typically we look for a days to cover of over 10 to signal a short squeeze, so we are still well below that short squeeze metric. And then with that being said, let's take a look at the valuation. Let's take a look at the financials for this company. So obviously we don't have a positive PE at this point in time, but the PE gap forward is actually at 9.4, which tells you that the PE is projected to be at 9.4 times over the next 12 months, which signals to me that this company is actually pretty fair valued here. And as long as things go as planned for this company, this company will be trading at a pretty cheap valuation. Obviously, if everything pans out in like it's kind of expecting it to, right? So, with that being said, I do think this company's valuation is pretty cheap. EBITDA is also pretty cheap at 3.9 times. So overall, I think this company's valuation is quite attractive. And then when we take a look at the growth metrics, we can see that growth over the past 12 months has been 547% in terms of revenue growth. And then revenue growth for the next 12 months is projected to be 344%. So definitely very high growth numbers for this stock. And then we can see the gross profit margin is at 20%. For those that don't know, that's basically just revenue minus cost of goods sold. It tells you what a company makes for what it sells. And this gross profit number is actually above their 5-year average of 7%. So this company's moving deeper and deeper into profitability, and that should definitely help this company turn, EPS positive very, very soon. And then with that being said, let's take a look at the balance sheet quickly for this company. So we can see here that they have $29 million in cash, $91 million in debt. So it's not a horrible balance sheet, but at the end of the day, they're likely going to have to raise some more equity just to kind of increase their cash holdings. Maybe they do it through the debt markets, but with rates so high, it probably would be more advantageous for the company to raise some equity. So I wouldn't be shocked if this company issues new shares over the coming months. And then with that being said, let's take a look at the analyst ratings on Wall Street. So we can see here that there are 6 bullish ratings from Wall Street and there are 0 bearish ratings. This to me signals that the market is overwhelmingly bullish on this stock. We can see that H.C. Wainwright has a $12 buy rating on the stock, a $12 price target, and a buy rating. And then we also see B. Riley Securities has a $16 price target and a buy rating. Needham has a $17 price target and a buy rating. So the most recent upgrades too have been positive. We saw 2 recent updates over the past month, and both of them have been bullish from Wall Street. So 6 bulls to 0 bears on Wall Street, signaling that this stock is a buy according to Wall Street, with the average price target being $14. So Wall Street thinks this stock should be much higher than it is. And then let's take a look at the chart and give a logical price prediction. So we came down to test the 200-day moving average at about $5, held this level, and have moved significantly higher over the past couple trading days. Now we're kind of running into the 50-day moving average at about $6.60. So it looks like we have rejected that level kind of intraday here. But in terms of a price target, I do think this stock likely moves higher up to support at about up to resistance at about $10.50, which is where shares had topped out in July and in June. So I think it's likely that we could see a move from about $6.50 where we are right now to $10 over the coming weeks, barring any massive sell-off and barring that, this upcoming earnings on Wednesday, the 11th here, is a solid earnings report. So obviously, keep in mind that this company reports earnings very soon, and that will have a massive impact on the stock. But like I said, Wall Street's bullish, and I do think we're going to see a lot of passive managers kind of come in and buy this stock over the coming weeks to months. So Very bullish on Applied Digital. I think it's a stock you should be thinking about, especially if you're interested in the AI space. This is a great stock to own. So with all that being said, I hope you enjoyed the video. I will end it there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.